Hey everyone, Andrew here. Welcome back to 2 Minute Tuesday, where every week we cover an important personal finance or investing topic and why it's important for you to know about it. And we attempt to do it in 2 minutes or less. This week, we're going to cover what an index fund is. We're going to quickly touch on the two main ways to invest in an index fund, what their main advantages are, and what we really care about is how investing in an index fund can save you tens of thousands of dollars from fees. So with that said, let's drop 2 minutes on the clock and get started. An index fund, which sometimes can be called an index tracker, is simply a fund that tracks a specific basket of stocks. Now, the three most well-known indexes are the Dow Jones, the S&P 500, and the NASDAQ. Now, the Dow Jones makes up 30 large companies. The S&P 500 makes up an index of, that's right, you guessed it, 500 companies. Now, there's going to be two main ways to invest in an index fund. That's either through a mutual fund or an exchange-traded fund. And now we're going to go into what the difference is between those two in another episode. Let's get into what the three main benefits are. Simplicity. You know, the investment objective is really clear and there's no debating it. You can easily invest in a single total stock market index fund and get super broad diversification. Now, the second is low turnover. In a more actively managed mutual fund, every time the fund manager buys and then sells stocks, that can trigger capital gains tax, which can sometimes be passed on to you as the investor. Now, the third and final reason is low cost. Because the fund tracks an index, you don't need a manager and a giant team actively picking or guessing on what stocks they think might be hot or not, and this helps reduce the fund's cost, which gives the fund a lower expense ratio. The average actively managed funds have fees between 0.5% to 1%, and some as high as 2.5%. Whereas one of my favorite index funds, VTSAX, has an expense ratio of 0.04%. NerdWallet did this great article on how if you're a millennial, just a 1% fee could cost you over $590,000 over your lifetime. And friends, that's some serious money. And that's money I'd rather you have than some giant investment fund. And this is why it's so important to get the basics of personal finance and investing down. It allows you to build financial stability and help create an abundant life. Now, we've got two more videos in this series I want to recommend to you, so be sure to click on those videos. We'll have them right over here and right over here. And if you have any other questions, please let us know. Yeah, I'm still waiting. Have you clicked on this one? Or what about that one? You can go ahead and click on them. They're both good, I promise.